Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the financial statements of companies and try to make sense of what is really going on behind the press releases. Today we are looking at News Corporation, and let me tell you, they have some interesting chatter about repurchasing their own stock. So what does this filing tell us? Well, it is a current report, meaning News Corporation is telling us about something that just happened or is happening right now. In this case, it is all about their stock repurchase program. News Corporation, for those who might not know, is a big media company. They own a lot of well-known brands in news, publishing, and even digital real estate. Think the Wall Street Journal, the Sunday, the New York Post, and many others. It is a company with a long history and a lot of influence. The big date here is the 12th of February 2026. This is when the earliest event we are talking about happened. The real meat of this report has to do with how they are buying back their own stock. You see, companies have these programs where they can buy shares of their own stock from the market. It is like they are investing in themselves. News Corporation has this program and it is authorized to buy up to $1 billion worth of their Class A and Class B common stock. Now, why is this important? Well, they have to tell people about it, especially if they are buying stock. They have to report these things to the Australian Securities Exchange, or ASX for short, basically on a daily basis if they are making any purchases. They also mention it in their regular quarterly and annual reports. What this specific report highlights are the details of the information they sent to the ASX on specific dates. It is not a full financial report for the quarter, but more of an update on their buyback activity. Think of exhibits 99.1 and 99.2 as the actual little tidbits of information they gave to the Australian stock market watchers. These are the specific disclosures about their stock buybacks. Now, here is where we get into what they call forward-looking statements. This is super important to understand. When a company makes these kinds of statements, they are basically saying what they plan or expect to do in the future. For News Corporation, these statements are about their intent to repurchase their Class A and Class B common stock from time to time. But here is the key takeaway. These are not guarantees. They are based on what management thinks will happen right now. Things can change. The market price of their stock could go up or down. General market conditions might shift. New laws could come into play, or they might find better places to put their money. All of these things can cause the actual results to be very different from what they are saying they expect. It is like planning a picnic on a sunny day, but then it starts raining. The picnic might still happen, but it will be very different. The information they provided to the Australian market, as noted in Exhibit 99.1, likely details specific instances of their stock buybacks. These reports are a way for them to remain transparent with investors and regulators about how they are managing their capital. Even though this report does not show a full financial picture like a 10Q or 10K, understanding these buyback programs is crucial. When a company buys back its own stock, it can have a few effects. It can reduce the number of outstanding shares, which in theory can increase earnings per share. It can also signal that management believes the company's stock is undervalued. For News Corporation, having these buybacks in place, especially for both its Class A and Class B shares, shows a commitment to returning value to shareholders. It also means they have enough confidence in their business to invest in their own stock. When we look at a company like News Corporation, we have to consider the broader media landscape. It is a challenging environment with digital disruption, changing advertising models, and evolving consumer habits. Amidst this, a robust stock repurchase program can be a sign of financial strength and strategic focus. It suggests that the company is generating sufficient cash flow to fund these repurchases, while also continuing to invest in its core businesses and pursue growth opportunities. However, it is always wise to look beyond the buyback itself. Are they sacrificing necessary investments in content or technology to fund these repurchases? Are there better strategic uses for that $1 billion, like acquiring a new, fast-growing digital media company, for example? These are the questions you have to ask. The forward-looking statements they mention are a reminder that while this buyback program is on the table, its execution and its ultimate impact will depend on many future factors. The risk, as they clearly state, is that actual results could differ significantly. So, to wrap things up, this filing from News Corporation is not a deep dive into quarterly financials, but rather a signal about their capital allocation strategy. They are actively managing their share structure through a significant buyback program. While this can be a positive indicator of confidence and a potential boost to shareholder value, investors should always remain cautious and watch for how these plans translate into actual performance, keeping in mind the inherent uncertainties of future market conditions and business operations. What do you think about News Corporation's stock buyback plans? Do you see it as a sign of strength or something to be wary of? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe to Corporate Decoder for more insights into the world of corporate finance. And don't forget to join our Discord community. The link is in the description for even more in-depth discussions. Thanks for watching, and I'll see you in the next video.